All right, guys, welcome back to another weekend review. This is going to be showcasing my portfolio's performance over the past week. The end of the week for the market was the 20th of March, 2021. And I can't believe how quickly this month is just flying by. Another week and a half and it's over. So as you can see, we're going to dig right into the meat and potatoes of this video, and that is, how do you keep sane when you are losing so much money in market gains? Most people, would be exceptionally upset if they see the market fluctuate negative $10,000 in 1 week. And what I want to talk about mainly is how you put that in perspective of your whole portfolio, your future, your goals. My goals for this portfolio are create passive income so that we can retire early. I've said it a couple times, but the goal is to get this up to earning about $80,000, and I think that I can successfully do that within about 10 to 12 years time frame. I do have a secondary portfolio that my wife and I hold, and that has shares of growth companies such as Tencent and a little bit of ABBV, but we're mainly going to be selling those positions off as we transition into earning more passive income through dividends as we go. Now, I do want to talk about a couple of things with the market. The drive downward for my portfolio is primarily because there are two stocks that hold over 200 grand in the portfolio total combined between them, and that's ABBV in healthcare and VST in utilities. VST is a relatively new position for me, and it is down a significant amount right now, but in the grand scheme of things, I think it's going to bounce right back relatively fast. Now, part of the reason I have such great conviction for this is the plan and the dividend raises. Both of these companies gave me a 2021 dividend raise of over 10%. VST's was 11. That makes it very easy for me to see a future where I'm building wealth, building something that's going to sustain for a long period of time, and going to continue to grow in other dividend paying companies. And the way that I plan to do that is by attempting to retire at 50 years old. We're currently putting in about 35% of our gross income, and that is exceptionally difficult to do at times. It's hard to not want the brand new car. It's hard to not want to go on vacation and spend a lot of money on fine dining and liquor and nice things. Live simply, save as much as you can, and hopefully retire early and get out of the rat race as quick as possible. That's my motto. That's what you're going to see this channel do. That's what we're going to do. We're going to be successful at that because we're going to put so much effort into making sure that that's a success. Now, I don't showcase all of the things that I do as far as stocks go, but we do currently hold about 7,000 shares of Tencent, and we do hold a minor position in ABBV as well. Those positions, if they continue to grow the dividend the way that they did last year, it's going to be hard to want to sell them in 10 years because that will have grown into a meaningful amount of passive income coming in from that portfolio. However, the plan is to transition and siphon off some of the capital gains from the growth stocks and harvest them to go into the retire at 50 portfolio that you're seeing here on YouTube. And over time, what I would really like to do is showcase the amounts that I'm going to be putting in every month, what my goals are monthly to try to do that, how we budget to do that. And right now we're currently putting in right around 3,300 or so on average. The goal is to hit about $40,000 over the course of 2021 with just this dividend portfolio. I think that's achievable. It's going to take a lot of work, a lot of savings, and a lot of budgeting to make that happen. That means no Lambos, no tugboats, nothing crazy, nothing wild. Maybe a small vacation as soon as we can possibly do that, but we'll see how that goes. Now, one of the things that I do want to talk about is, when do you do those things? When do you begin the transition phases of moving money into dividend stocks versus just moving it all right away and shooting for 50K a year right out the door? Because that's approximately what I think I could do if we were to sell our other positions on Monday morning and move everything over. I think we could get the portfolio to probably about 48,000 or so in passive income through dividends. But I do believe in the growth of Tencent. I believe in the growth of the company. The fact that they're growing their dividend at such a high rate gives me some inspiration to see, where the future may go with that company. It's one of the largest companies in the world. It's pretty much become a conglomerate of investments all across gaming and various other energy plays, all kinds of different things, from electric vehicles, AI. It's amazing to see how their partnership with Spotify went and how they hold a huge stake in Spotify. It's very, very interesting to me to see all of the things that they've just webbed their fingers out into and amassed as this huge investment conglomerate, very similar to Berkshire Hathaway. Really, the only downside to it is the looming fear of the Chinese government making changes and adjusting things on the fly that may bring the stock down, or there's a lot of politics that go around investing in foreign companies. I am one of the people who doesn't really like to have all of their eggs in one basket. That's why I've picked out a bunch of stocks in this portfolio, and why I'm even considering possibly just doing ETFs with that money, just because it might end up being a little bit safer in the long run to turn that into a approximately like 3.5% yield. I think that's an obtainable number. I think it would be pretty solid to do that. But if I did that, it would mean that it would be lowering my current portfolio average, which is just over 4%. And that's primarily due to the growth in ABBV and how much it's scaled over the past year. It's just phenomenal. I'm hopeful that the patents, the issues will get ironed out with the FTA, and they'll go forward. They've got a couple more months on the particular patent that it was down on this week over the news. So hopefully that'll get pushed through and all of the kinks will get worked out with it. But there's a lot of other things in the pipeline for them as well. There are risks associated with doing dividend investing, especially when you're doing it at the scale and the level that I am, where you've got these positions that some of them are above $100,000. I do plan to add a little bit more to VST, possibly by the end of this month. I want to get that up. It's currently at 5,808 shares, almost 5,809. I want to go ahead and push that up to 6,000. That's going to bring it up over right around, you can see its earned dividends are $871.35. That's going to be paid out in a little over a week and a half, on the 31st. So I would like to get that pushed up over $900. That's just going to be phenomenal, because I think that'll cover utility bills for just about anywhere that we would live for the year, just by getting those quarterly payments and breaking that up. I like to do a thing called micro investing, and I haven't heard a lot of other investors talk about this, but I like to set these micro goals for stocks in my portfolio. Um, One of the big ones for me is healthcare, because when you go to fire, you have a really high healthcare cost. So I wanted healthcare to provide my wife and I with enough income to cover the insurance and cover everything. And that's why I focused so laser like on that. And I've kind of done the same thing with utilities now. I will move on from, I will likely put a little bit more in AT&T to get that up. That's been slowly going up and down. When we look at that over the month, it's actually up 2%, which is pretty wild. I'm hoping that this will continue to go up, but I do want to get this portfolio position. It would be really nice to get it up a little bit higher, maybe closer to 2,000 shares. We'll see. But if it continues to stay in the $29 mark, and just under 30-ish, I think it's a decent buy considering the growth of HBO Max. If they continue to grow at the pace that they've been growing this year so far, they've got a pretty good foothold on the income stream that's going to create. I know Joseph Carlson talks a lot about the streaming stuff. I do believe in streaming. I'm a Netflix subscriber, a Disney Plus subscriber, an Amazon Prime subscriber. You know, the list just goes on and on and on. I just think that's the way the future is going to go for most modern entertainment. So getting this position up to the point where it covers phone bill cost, new phones every few years, getting everything like that, anything to do with communications, internet, I bundle all of that into the T stock payments. I like the mindset of accomplishing these little micro goals that just pay your bills, pay your utility bill, pay your telecom bills, get through all of those things. I would love for real estate to be a big enough position one day where it pays all of the property taxes on our forever home. That's kind of the micro goal for real estate. And you can do this with just about anything. Your consumer pie, you can break down your food bills, everything. You can do many, many different ways. But I found that this is a way that I keep my mindset, I keep focused on what I'm investing in, why I'm investing in it, and I keep these budgeting goals there so that I can see and just check off. I've got that food thing covered, for the next 50 years if I live that long. Being in my 30s, I'm not sure I'll make it to 80s, but that's the goal. I need to work on that health and fitness and focus on my body and slow down on the mental mindset game and go for the physical body game as well. And that's one thing that I haven't really talked about on this channel, but it was kind of brought up. We've gone through a very stressful year, primarily due to the pandemic issues. It's very stressful mentally. You've got to keep whatever little focus you can with your investing on your future. And if micro goals help you, drop me a comment, a like. What do you even think of that idea? I think it's a way that's kept me focused over the past year, and I've really enjoyed it quite a bit. I love being able to check off these little boxes and know that these things are going to be taken care of for quite some time. Now, I'm going to leave the week looking at the 1 month, because 1 week doesn't mean a whole lot. 1 day doesn't mean a whole lot. We got to look at the 1 month, and then we got to look at the all time. We got to keep this number going up. And as this one goes up as well, it's going to do phenomenal things to secure your future. Keep your market gains as just kind of a speed bump. You go up, you go down. Sometimes they're slow. Sometimes they even go backwards a little bit. In the long run, it's going to be green. and that's the only color that matters here. Build your dividends, build your market gain up, and you're good to go. And thank you very much for tuning in to this episode on the Dividend Doggo channel here on YouTube. Thank you very much for all of the likes, the comments, and the 100 subscriptions. I did not honestly think that I would be able to get to even 100, and I know that might sound silly to some of you, but I really appreciate every one of you who has clicked on the video, dropped a comment, liked, subbed, everything. I appreciate all of you. Dividend Doggo out.